Welcome to the deep dive. Today, we're cutting through the complexity of corporate reports.
Yeah.
We want to unearth the crucial insights from Adani Power Limited's Q1 FY26 financial results. Our goal for you is really to dive past those headlines, find the maybe surprising facts, and help you walk away truly well-informed about, well, one of India's largest private power producers.
Absolutely. And we've really dug deep into their latest board meeting insights from August 1st, 2025. We've looked at their unaudited financials, the official press release, and importantly, the detailed earnings call. So yeah, it's a pretty comprehensive look at how Adani Power is navigating India's, dynamic energy landscape.
Okay, so let's unpack this. Starting with that board meeting on August 1st. Beyond just approving the financial results, there was a pretty significant decision, wasn't there, about a stock split?
That's right.
The board approved the subdivision, the splitting of one existing equity share Rs, 10 face value into 5 shares, each with a face value of Rs2. This is obviously subject to shareholder approval. What's the strategic thinking here? What's the play?
Well, it looks like this move aims to do two key things. First, enhance the liquidity of the company's equity shares, make them easier to trade. And second, encourage participation from retail investors, basically make the shares more affordable to buy into.
Right, broaden the base.
Exactly. It's about widening that investor pool.
Okay. And what about the headline numbers for Q1 FY26? What's the immediate financial picture look like?
Right, the numbers. Consolidated profit after tax, or PA, it stood at just over Rs 3,300 crore. Now, that's actually a strong bounce back from the previous quarter, Q4, which was around Rs 2,600 crore, though it is a bit lower than last year's Q1 figure. That was closer to Rs 3,900 crore.
Okay. And revenue, EBITDA.
Consolidated continuing revenue was around Rs 14,167 crore, so a slight dip from last year. And EBITDA also saw a modest dip down to Rs 5,744 crore. But, while these headline numbers show that modest dip year on year, I think the real story is how Adani Power is navigating a shifting energy market. Well, things like lower merchant tariffs, that's the price on the open market, and a decrease in import coal prices definitely played a role in those revenue and EBITDA shifts. But this also happened alongside recent acquisitions, which influenced operating expenses. So it suggests a more complex interplay of factors, not just, a straightforward decline.
That makes sense. What always strikes me about the power sector is, like you said, it's never just about raw capacity. It's got to be about perfectly matching that capacity to constantly shifting demand. So how did Adani Power navigate those market dynamics this quarter?
I see their operating capacity grew, right, to over 18,000 milliW.
18,150 milliW in July.
And total power sale volume actually grew slightly by 1.6% to 24.6 billion units. But here's the puzzle, right? Despite that sales growth, their plant load factor, the PLF, how much capacity was actually used, it decreased quite a bit, down to 67% from 78% in Q1 last year. How do we square that circle? That's a great question, and it really does highlight the market's volatility. The underlying context here is crucial. All India energy demand actually shrank by 1.6% in Q1 FY26.
Oh, shrank. Why?
Early monsoons. You have to contrast that with Q1 FY25, which you saw this really intense heat wave driving demand sky high. So this reduction in overall demand naturally affected their long-term power purchase agreements, their PPA offtake, and it also led to a 16% decline in the average market clearing price on the Indian Energy Exchange.
Okay, so lower overall demand, lower spot prices. But their sales volume still went up.
Yeah, so how did they do that? Well, they leveraged that additional 2,300 millidaryo capacity they acquired last year, and they significantly ramped up their short-term or merchant sales. That's power sold on the open market outside those long-term contracts. And those merchant sales were up by nearly 8%.
Okay, but I imagine the price they got for those was lower.
Exactly. Their realization from these merchant sales was lower this quarter. It was Rs 6.51 per kilowatt hour compared to Rs 7.60 last year. That just reflects that softer market.
Right.
The good news, though, is that management expects Q2 merchant rates to pick up. They feel the monsoon impact was mainly concentrated in Q1.
Okay, interesting. So we've seen how they're performing operationally in this very dynamic market. But Adani Power's strategy isn't just about managing existing assets, is it? It seems to be about pretty aggressive expansion, too. Let's get into the major strategic moves they've made with acquisitions and amalgamations.
Oh, yeah, they've definitely been busy. The acquisition of Vidarbha Industries Power Limited, VIPL, that's a 600 milliW coal plant, was completed in July. What's interesting there is this plant had actually been shut down since 2018, but it's now overhauled and ready to
ABQ
contribute.
online. Okay.
Then there's Lenco Amarcontac Power Limited, which is now called Corba Power Limited, or KPL. That was acquired back in September 2024. That's a 600 milliW operating plant, but with another 1,320 milliW under construction. So future growth built in there. And Coastal Energen Private Limited, CEPL, a 1,200 milliW plant, also acquired last September. Adani Power holds de facto control there and is overhauling its units one by one. And finally, Adani Power, Harkand Limited, APJL, with its big 1,600 milliW Gata power plant, was formally merged, amalgamated with APL effective from April 1st, 2024.
Wow, that's a lot of integration activity.
It is. And what's truly insightful, I think, about these, rapid-fire integrations isn't just the sheer expansion in megawatts. It's how Adani Power seems to be strategically de-risking by integrating plants that solve specific regional energy gaps and how they immediately impact the financial health of the overall portfolio rather than just, adding raw capacity numbers.
That makes sense. It's more strategic than just buying stuff. And speaking of financial health, what's the ripple effect of some of these integrations been? For instance, with that Gata plant, I think you mentioned there was a credit rating upgrade. And maybe some good news on payments.
Exactly. The amalgamation of the Gata plant led to an implicit credit rating upgrade for its facilities. It went from BBB stable up to A stable.
That's a significant jump.
It really is. And it's expected to substantially reduce its finance costs, which is obviously a big positive. Even more importantly, perhaps, the Godda plant, which supplies power under a long-term PPA to the Bangladesh Power Development Board, has started receiving regular payments. They've received over $500 million in just the recent months. That brings their outstanding receivables down to near normal levels.
It all must be a relief.
Definitely. And the plant's utilization, its PLF, was a pretty healthy 73% during the quarter, too. So yeah, these moves aren't just about adding megawatts. They're clearly about optimizing the financial structure and the operational efficiency across the whole portfolio.
Okay. Now, anytime you're dealing with a company of this scale, especially in a sector like power, there's always a complex regulatory and legal environment to navigate. Adani Power seems to have several ongoing matters. Can you give us a sense of that landscape? What's kind of at stake here?
Absolutely. They are navigating quite a few regulatory currents, as you say. For example, they're pursuing some significant compensation claims related to additional coal costs for plants like Baroda. This is due to issues like the Lohara coal block cancellation and also shortfalls under the Eshek TI policy, which governs coal allocation in India. They actually recognized hundreds of crores in claims just this quarter alone.
Wow.
Similarly, for the Haryana Discoms, that's the state's power distribution companies, Adani Power is claiming compensation for alternate coal costs. Now, while a final resolution is still pending, the Haryana Discoms are already paying 50% of the claims, and discussions are ongoing for the full resolution.
So progress, but not fully resolved.
Correct. They also received tens of crores in final compensation for the cancelled Jitpur coal block. That seems more settled. Then there's also a matter with Gujarat Urja Vikas Nigam Limited, GUVNL, regarding alleged excess energy injection at their Bitta solar plant that led to some withheld payments. Adani Power got most of that back following an interim order from Alatal, the appellate tribunal for electricity, but the final adjudication is still pending.
Okay.
And for the Udupi thermal power plant, the National Green Tribunal, NGT, directed an additional payment for environmental compensation.
Yeah.
The company has expensed that and has appealed to the Supreme Court. The plant itself continues to operate in compliance, though.
Right.
And finally, for the Kauai TPP, claims for additional coal costs due to domestic coal shortfalls are still being realized. A petition challenging the methodology was dismissed by the State Commission, RERC, but an appeal is now with APTEL.
That's a lot of legal and regulatory complexity to manage. It really underscores how much of a company's success, especially in this sector, hinges on navigating these currents effectively. And of course, separate from these operational regulatory matters, in recent years, the company's faced some broader allegations. How are those being addressed in these latest reports?
Yeah, that's a critical point to touch on. The auditor's report and the company's own statements directly address a short seller report that was published back in FY22-23 and the related SEBI investigations that followed. They note that the Supreme Court effectively disposed of related matters back in January 2024. The company states that SEBI concluded 22 out of 24 investigations, and it issued show cause notices regarding non-compliance related to related party transactions and shareholding categorization.
Okay, so investigations concluded, but show cause notices issued. What's the company's stance?
Management's position is that they believe all investigations by SEBI have been concluded. And based on independent legal and accounting reviews they commission, they express confidence that there are no non-compliance issues with applicable laws and regulations. It's also noted in the reports that a U.S. Department of Justice and Securities and Exchange Commission indictment was made against a non-executive director.
Right, I remember reading about that.
Yeah, but the company explicitly states it was not named in those matters and believes there is no impact on Adani Power itself.
Okay.
So I think it's crucial for you, our listener, to understand that the company appears to be transparently reporting these challenges, while at the same time asserting its compliance and its confidence in favorable outcomes for the pending matters. We are, of course, just impartially reporting the facts as they are presented in the source material provided.
Understood. Okay, let's turn back to the company's financial health, specifically its debt position. Total debt outstanding as of June 30th, 2025, increased to over R34,000 crore. That's up from roughly R38,000 crore just back in March. That seems like a pretty significant jump. What's your immediate read on this? Is this a potential concern, or is it more of a strategic move given their expansion plans?
That's a very fair question to ask when you see a number like that. The increase in debt is primarily attributed, according to the company, to bridge financing for capital expenditure and also working capital borrowings, which they say aligns with their increased scale of operations and those recent acquisitions we discussed.
So linked to growth.
Yeah, it seems largely a strategic move tied to their growth ambitions. In fact, they also made significant repayments of unsecured perpetual securities this quarter. They redeemed over Rs 2,500 crore of principal and made a substantial distribution payment to holders. And by July 2025, just after the quarter ended, all remaining principal outstanding on these specific securities was paid off. So that's cleared.
Okay, so managing different parts of the debt structure.
Exactly. And if we connect this to the bigger picture, the management's approach to funding seems quite telling. They state they expect internal accruals and cash flows to be sufficient to meet the capacity requirements for the year, which should minimize reliance on further external debt, at least for the under construction projects.
Right.
And the company's credit ratings, as we touched on with GATA, have generally seen upgrades, reflecting what seems to be a strengthening balance sheet and improved credit profile. This is really underscored by their net debt to continuing EBITDA ratio. That ratio has dramatically improved from 9.7 times back in FY19 down to a much healthier 1.78 times as of June 2025 on a trailing 12-month basis.
That is a strong indicator of improved financial discipline, or at least leverage. Okay, looking ahead now, Adani Power clearly has a significant vision for growth, trying to align with India's increasing energy needs. The government itself has set some ambitious targets for additional thermal power capacity, hasn't it, by FY 2031-32.
Yeah, the target was 80 GW, now potentially being raised to 95 GW of additional thermal capacity needed by then. That's to meet anticipated power deficits.
So how does APL plan to capitalize on this massive market opportunity?
Well, they're certainly thinking big. Adani Power plans to expand its installed capacity to over 30,000 milliW by 2030, with a significant chunk of that, over 12,500 milliW, coming from new projects, both brownfield expansions and one greenfield site.
That's a huge expansion pipeline.
It is, and what's fascinating, I think, is how they seem to be de-risking this ambitious expansion. They apparently possess 100% of the required land already at strategic locations, and they've proactively secured key long-lead equipment, things like ultra-supercritical boilers and turbines, by ordering them in advance for the entire 11.2 GW of planned new capacity.
Planning ahead.
Definitely seems like it. And execution is already well underway for nearly 5,000 milliW of this expansion. For example, Mahan Phase 2 in Madhya Pradesh is reported as over 66% complete. And the Raipur and Raigarh Phase 2 projects in Chhattisgarh are also making good progress, over 25% and 20% done respectively.
And are they securing buyers for this future power? Locking in PPAs.
Yes, that's crucial. They've locked in new PPAs, including a new long-term agreement for 1,500 milliW net capacity with Uttar Pradesh Power Corporation Limited, UPPCL. That's for 25 years. This brings their total incremental PPA tie-ups for this upcoming capacity to over 4,500 milliW. And they're also actively bidding for new large PPAs in other key states like Bihar, Madhya Pradesh, Rajasthan, and Uttarakhand.
So securing the offtake alongside the construction.
Precisely. This kind of strategic foresight, coupled with what they describe as strong in-house project management capabilities, seems to position them well to capitalize on India's projected power deficits. It's pretty clear that coal remains a critical and enduring part of India's energy mix for the foreseeable future, and APL is clearly aiming to meet that demand with cost-effective, efficient thermal power generation.
Okay, we've covered Adani Power's ambitious growth plans, their strategic moves, the financial picture. But, in today's world, a company's success isn't solely measured in megawatts and rupees anymore. Their commitment to sustainable practices and community engagement, what we often call ESG, is becoming equally critical for stakeholders. Let's just briefly explore how they're performing in that arena, based on the reports.
Indeed. On the environmental front, their reported water intensity for Q1 FY26 was 2.21 cubic meters per megawatt hour, which they point out is significantly lower than the statutory limit of 3.50 for hinterland plants. So efficient water use. They also achieved an impressive 110% aggregate fly ash utilization for the quarter. That demonstrates pretty effective waste management from their coal burning.
Okay, those are some key environmental metrics. What about the social side? CSR.
Yeah, their corporate social responsibility programs seem quite active. They highlight enhancing education through projects like Uthan. Apparently, this project adopted 77 government schools in the Mundra area, benefiting over 11,000 students. They also provide healthcare services via mobile units and rural clinics in various locations where they operate. And there's a focus on empowering women through economic initiatives, plus community development activities like tree plantation drives.
All right. And just one quick operational update you mentioned earlier related to fuel security.
Oh yes, the Dolly coal mine. Production there is expected to begin by September or October this year, so progress on securing their own fuel supplies.
Got it. So we've covered a lot of ground here. What's your main takeaway from this deep dive for our listener? You've now seen how Adani Power's recent performance is really shaped by a combination of strategic decisions, shifting market forces, and their pretty ambitious future plans.
Yeah, I think looking at all this, it raises a really important broader question. As India's energy demand continues to surge, and given Adani Power's aggressive capacity expansion plans, their strategic advantages in securing land and equipment, and their stated commitment to both thermal and renewable energy, how might the country's entire energy landscape transform in the coming decade? And maybe even more broadly, what implications could APL's pivotal role potentially have on global energy markets down the line?
Definitely something to ponder as you continue your own journey of discovery. Until next time, stay curious.